Always a pleasure to have you on. I am Pius Kojobaka. Let's now settle for the details. A perception research conducted by think tank Institute for Liberty and Policy Innovation has revealed that the Bank of Ghana cannot absolve itself from the collapse of 420 financial institutions between 2017 and 2018. The research conducted between August and November 2022 gathered information from the public on the perception of government wasteful spending from 2014 to 2021 with the financial sector reforms as a variable. Now, 77.5% of the 2,000 respondents were of the view that the government has wasted taxes on the collapse of banks. Executive Director of the Institute for Liberty and Policy Innovation, Peter Bismarck Kofi, disclosed this at the launch of the Government Waste Report at Tema in the Greater Accra region.
120 financial institutions made up of 9 banks, 23 savings and loans, 347 microfinance companies, 39 microcredit companies, 1 remittance company, and a leasing company had their licenses revoked between 2017 and 2018. According to government, the banking sector cleanup was to ensure orderly exit of insolvent institutions to protect deposited funds as well as safety and soundness of the sector. This decision was, however, greeted with discontent as it led to loss of jobs. The research by Institute for Liberty and Policy Innovation indicates Ghanaians are not happy over the cleanup. 2,000 respondents took part in the questionnaire-based poll that used digital and online platforms, including Ilapi website, Facebook, Instagram, Twitter, and WhatsApp, with volunteers from all 16 regions engaged to assist. Government is said to have spent over 25 billion Ghana cedis on the exercise to protect 4.6 million deposited funds, despite citing 11.7 billion cedis in the 2020 budget statement for the same exercise. 77.5% of the 2,000 respondents were of the view that government wasted taxes on the collapse of the banks due to lack of transparency and accountability. Peter Bismarck Kofi is the Executive Director, Institute for Liberty and Policy Innovation.
We only have political appointments at BoG, whereas the existing directors still stay there. So it's important that we have terms and well-structured units at the BoG to ensure that these banks are doing the right thing, because there are structures already. Because if BoG comes to tell me that bank had a license in a dubious way, and those who supervise the bank to get a dubious license are still in position, I mean, it raises questions. The future, as I say, is not bleak. The insurance sector is not that strong enough. That is why everything is resting on the banks, because insurance, you need basically about 100,000 to 300,000 Ghana cedis to run an insurance company. So for banks to stand strong against IMF conditionalities, it's all about being liquid.
Meanwhile, Peter Bismarck Kofi says it will be in government's interest to protect local investors.
Investment into Ghana is huge, apart from South Africa and Nigeria, because of the oil and gold. So if the government will focus more on attracting FDIs and protecting local investors. See, the challenge is that we don't protect local investors. We look more into foreign investors. So the foreign investors own the banks here, they make profits, they repatriate them. Then the local investors do not get that protection of their funds. So, and every financial sector lies on huge deposits of local investors. You and I, we are all investors because we all have bank accounts. So if we are not protected as local investors, and we allow only the FDIs to direct the part of our economy, when the monies are sent back to their countries, that's where you see the inflation and the what do you call the cedi depreciation coming in.
The research revealed government had wasted 73 billion Ghana cedis on some programs and key decisions, which include the banking sector cleanup.
More on banking. Shareholders of GCB Bank PLC have authorized directors of the bank to raise additional equity capital of 1 billion cedis through a renegotiable rights issue to procure additional listing of issued ordinary shares on the Ghana Stock Exchange. According to the bank, the decision is to strengthen access to funding markets while bolstering confidence in the bank following the impact of the domestic debt exchange program. Now, speaking at the bank's 29th annual general meeting, Managing Director of the bank, Kofi Adumaku, said the move is to seek the capital support to develop and, of course, come up with a comprehensive capital plan. There is more in this report. Following the adverse impact of the domestic debt exchange program, GCB Bank PLC recorded a loss before tax of 743.5 million cedis in 2022 compared to a profit before tax of 832 million cedis in the prior year. This loss was largely due to the impairment loss on investment in government securities of 1.8 billion cedis owing to the domestic debt exchange program. As a result, at the 29th annual general meeting of the bank, shareholders have authorized directors of the bank to raise additional equity capital of 1 billion cedis through a renunciable rights issue on the Ghana Stock Exchange to boost the earnings generation capacity of the bank through non-funded sources. Kofi Adumako is managing director of the bank.
It's a difficult time, and I do appreciate what our shareholders have done is they've shown and made a vote of confidence in the bank, in the management and in the board. It's a difficult time for anybody to put investment in a financial institution at this particular point in time. And we are seeking to raise 1 billion. We got a resounding support. We got resounding support to do that. It's going to strengthen the bank. It's going to enable us also meet our regulatory requirements. It's going to strengthen our balance sheet, reposition the bank where it was before all of this. It's going to also enable us implement certain products.
He tells Joy Business, despite the impact of the domestic debt exchange program on its operations, he is optimistic of a positive turnaround in the next financial year.
The future is bright. Despite all of this, I am convinced, and my board is strongly behind me to pursue our strategic agenda, which is built on 3 key pillars. Okay, one of them, which has to do with revenue. Revenue growth is still on the agenda. Okay, so the future is very bright.
Meanwhile, the bank recorded a revenue of 3 billion cedis, representing an increase of 24% compared to that of 2021. Now, the Pan-African Payment and Settlement System says although the focus of its framework is to increase cross-border trade with the use of local currencies, it will be a gradual process for a full rollout to materialize. As a pillar of the African Continental Free Trade Area, PAPS is seeking to create a platform that will wean the continent off the reliance on the US dollar as forex, which currently identified to be cost $5 billion in capital each. Now, speaking exclusively to Joy News, John Bosco Sababi, Deputy Chief Executive of Pan-African Payment and Settlement System, says takeoff would have been a lot more easier if there was common currency.
PAP's focus and purpose is to increase trade in the African continent, intra-African trade, and yes, also using our local currencies. But it's a gradual process. PAPS operates on the basis of local currencies and also in terms of the speed of delivering payments. Okay, let me take a step back. There are 4 challenges of cross-border payment systems all over the world. We have the challenge of speed. A payment from Benin to Nigeria will first hit the US, hit the UK, and get here in 3 days or more. The other is cost, and the other is with all that trajectory, you lose transparency and also access. So PAPS offers all these challenges and solutions to these challenges. One is an instant payment system. Instant in that the recipient receives the funds in maximum 120 seconds. In the trials that we've done and today the transactions we've carried out, we've averaged 10 and below seconds. So the funds are there, and they've been local currency. Now the challenge with the dollar you're talking about, yes, it is real, because we've traded in this currency for quite a while, and the intention is not that we do away with it, but that increase and facilitate trade here. And how do we do it? We encourage the use of local currencies, and because countries have imbalances in trade, that difference is netted off. It's a net settlement system. The net is settled in dollars. So ultimately, even today, before we completely use our local currencies, countries save, because they've been paying out at gross amounts. Now they'll be paying net amounts in dollars. So there's a substantial reduction in what they pay out.
Well, we're talking about what your target is, because in Africa, we know that annually over 5 billion is being lost because of these transactions that go out of the continent and then get back to us. But the question about the approach, where we should have been starting from, many experts say, and you can share your side and where you stand on this, that we should start with a common currency. At least that will unify the continent before we have a common, payment and settlement system. You agree with that approach?
It works in different ways, and probably that can work as well. However, if you look at where we are and where we started from as African countries, we are independent countries. We have 41 currencies to date. So, and we also have certain stages of economic integration that we need to go, that usually we go through. There's a preferential trade area, there's a common market, and so on and so forth, until we get the monetary union. Now, given where countries are and how they want to integrate, then you can introduce the common currency in the beginning or in the end. This would have been easier if we started off in 1963 with one currency. When countries have not established currencies, then we begin one. This is what's happening in the BCL region and the rest. That was done. However, where we are now is we need to, one, transact in what we have. There are so many fundamentals that we need to be able to reach a monetary union. This is a process that even Europe went through. We target one that was using different currencies, and eventually they came to one currency and one payment system. So it depends on where at what stage we are in terms of trade, in terms of economic integration, and all that. So what we're pursuing is close to similar what was pursued to in Europe. We have one payment system that needs one common currency.
But you concede that a one currency policy would have made your work much more easier?
Well, it depends on when it would have been introduced. It could make the work easier if it was introduced in 1963. Maybe, probably wouldn't even be here doing this kind of thing. But if it wasn't done then, we just need to do it.
A full conversation airs later on Foreign Affairs with Blessed Suga on the Joy News channel at 10 p.m. Do make a date. You're still watching Business Live. More after this break. Hello, welcome back. Let's go to the Ashanti region, where there are indications consistent increases in the price of flour and baking products are reducing patronage in some parts of Kumasi. The price of a bag of flour has shot up from 580 cedis in the first quarter of this year to 650 cedis. Now, some retailers of bread say the size of a loaf has been reduced, and this has affected their daily sales and profit margin. Love FM's Mona Lisa Frimpong has more.
A bag of flour which sold at 580 Ghana cedis in the first quarter of this year currently sells at 650 Ghana cedis. Prices of other raw materials such as margarine, salt, milk, sugar, eggs have equally shot up. The price hike is pushing most flour users, especially bakeries, out of business. Some bakers say they now use small amounts of some ingredients and essential additives in baking bread. This, they say, has affected the quality of bread on the market.
One sikani system ni mo ana pano so ye aduane bia ya akona aduane ye to e de so kom so nti imagine say ubeyi be say 30 cedis 40 cedis akoto bread abra uyi say sikana e bia betimi ato bayire ana se bia betimi ato mori ana se bibisa ma wo modi amen be na de beto bread.
The situation is affecting some consumers of bread who say they now patronize other flour products aside bread.
Bia betwa to pan no fu bu kakra bi na asa se de we omusi kese no o mate so enintia na ne den so ko no ma no mo de ye no o mate so enintia majuri ni sugar na ekosua na mo de frafra no mate so
nipa ni gumu ahoro still ebi de ede still ebi nso de enye and any panamon so aye pan no nse se obeyi ne yem no aye ne ye no onye ne sa esa ne sika ne mfa so bumu a wo penti obeyi ne biala no nso ni se ye ya ye be dey ye beto
na ke se pan no first udi pan no to say yes me mi so akura me ya be ma no abrante ye no pan no Kumasi ya na esi so pa ginani Africa bongru on a pan, the whole Kumasi. Utim say, as I take Metia Safu Samreno, Min Nantifrio, me ko hokotobi eba.
What is to na die?
Oh, and na die dey say nya pano. Pano no ebi obi em kura ahwi.
I don't have any problem with any baker these days because it's very expensive to get a loaf of bread or even a piece of bread, which doesn't make sense because you cannot be chewing the bread like you are chewing, eating something.
Add something.
You need to add something. So you have to complement it with something. So if you have to go for a piece of bread or a loaf of bread for 20 cedis, 20 cedis alone for bread, hello.
On the streets of Kumasi, retailers say they are recording low sales. According to them, their daily sales of 50 loaves have dwindled to between 25 and 30 loaves of bread. They want government to reduce taxes on raw materials to keep them in business.
When I joined the business, it was moving all right. But these days, the business wasn't going all that because they said it was that time it was 10 cedi. Now it's 12 cedi. People are complaining. Sometimes when you take bus, when bus come and take you, then they are going. Somebody say, "Oh, how much is the bread?" When you say it's 12 cedi, they'll say they'll be complaining that it's too much because it's 12 cedi.
You say no man boy they call because they say on no back of my saying, "I have to pay 12 cedi." This is my say quiet brasa. I want to say first it me 2 pound 100. They say pound 50 and me
Leadership of the Ashanti Flour Users Association tells Love News that despite petitioning government over the excessive hikes in the price of flour, the situation persists. CEO of Matiko Bakery, Ekwia Friye, and Isaac Ajiman wants government to come to their aid.
Free 120. 2020 na 120 na call ya kodu 600 ya kasa anwa ne ka stress aban betumi aye hu bibi aman ba ye pem ya call Minister of Trade wo Accra nyina de ekon ye hu ye ne say efi last year October na aba December no mu ne de price na omo ante so ebo no nso a amo amfa bi account e maintaining standards a be pem say do January intina ye empire born no say sane economical situation e say ye ntinka ye ba January ya nka e bi ambati ase na omo atiso aman but say e bro January months no ya san increase in premium san e cost 620 630 na say ye ka say 650.
For Joy Business, Mona Lisa Frimpon reporting.
More from the region, and Memphis Monroe Bank is increasing financing to small, micro and medium-scale enterprises to create jobs opportunities in its catchment areas. Now, over 25,000 business owners are captured under the bank's microfinance scheme, benefiting from over 154 million cedis disbursed in loans to the sector. Chief Executive Officer Dr. Alexander Asma explains the bank continues to offer business advisory services to these enterprises to ensure they stay afloat. Nana Yaujima was at the bank's annual general meeting and has filed this report.
The Monroe Rural Bank is helping build local economies through support for micro, small and medium-scale enterprises. Already, the bank is targeting productive sectors of the economy to grow its revenue as the domestic debt exchange program takes a toll on some investment opportunities. CEO Dr. Alexander Asma explains.
The most safest investment that we know in a country is the government bonds and securities. And now that is not too safe, as you are aware, because government has declared its inability to pay its commitment on bonds. And now the only window left is the treasury bills, which also must be managed carefully. So as a bank, we are strategically positioning ourselves to push our funds into the hands of productive sectors of the economy.
The bank's 2022 annual report indicates a profit margin of over 8 million cedis, 10.4% higher than the amount recorded in 2021. Total deposits grew to over 557 million cedis from 401 million cedis. Total also went up by a variance of 159.3 million cedis, a 38.6% increase over the previous year. Operating income and investments grew by 25.4% and 11.4% respectively. Cash and bank balances increased to 173.9 million cedis, representing a significant growth of 232.5%. Dr. Asma says strategies to help businesses recover from the COVID-19 pandemic shocks have yielded satisfactory results.
And this year looks even much better. Our first quarter results was amazing. Our second quarter result is also looking extremely good. And I'm sure that this year is set for a very good performance because we are focusing on the financial intermediation, which is the core of the bank's business.
Meanwhile, the bank's present loan portfolio at the end of the year was reduced by 914,000 cedis due to a change in focus to a short-term lending. Dr. Asma says the strategic change has allowed for more businesses to benefit from the support.
So because of the shift from a long-term lending to a short-term lending, the portfolio had a shift because then you see that the long-term facilities like 5-year tenure facilities or the 3-year tenure facilities are now giving way for short tenure facilities like 1 year, 6 months, 9 month facility. And that is what has resulted in the slight reduction in the portfolio.
For Joy News, Nana Ojima report.
Thanks so much for your company. I am Pius Kojo Baka. You can always get business stories when you log on to myjoyonline.com/business. Do enjoy the rest of our programs and have a lovely weekend. Bye.